What's up, everyone? Dan here, Crypto Capital Venture, October 9th, 2019. I just came across the most interesting tweet that I've seen in a while. Yes, that's in regards to $6,400 as a bottom. I guess you could call it a short to mid-term bottom. And I want to talk about that in this video because it really plays into the charts that we've been looking at on the long term, on the short term. So I want to just jump into the tweet for you. I know a lot of you aren't on Twitter, so I hope this is helpful to you because I think this is really solid. This is really solid content, and it analyzes the data, which we love doing on this channel. And this is stuff that I don't typically talk about as well, and I find it very interesting. So JMac retweeted this on my Twitter, and this is by Cole Garner. And let's just start. Bitcoin, what happens next? Phil B called Bitcoin's bear market bottom 12 months in advance before the bull market even finished. His words on December 4th, 2017, I would lean towards 3K. His take on what comes next and why is fascinating. So here is that post. This was back in early December. He really did call 20K top and 3K retracement. So, that's that. Just want to throw it out there. I'm not going to go over that part of the tweet, but he did do that. It goes on. First, how was Phil B so on point? He focused on one metric, estimated cost of mining production. He laid it all out in March 2018. Estimated cost of production's price range bottoms out at $31.70. 9 months later, Bitcoin bottomed out at $31.48. Why is production so relevant? Miners are natural sellers. They drive supply more than anyone else, but their incentive to sell vanishes below the cost of production. Institutions and smart money knew it and were ready. Retail was mostly unaware. Remember that. Don't take it from me or Phil B. Take it from Satoshi in 2010. The price of any commodity tends to gravitate toward the production costs. And here's that quote. The price of any commodity tends to gravitate toward the production costs. If the price is below cost, then production slows down. If the price is above cost, profit can be made by generating and selling more. Bitcoin's bottom doesn't have to track mining's production cost floor, but it did. Just like it did in 2015, the last time Bitcoin hit bottom. I had a hard time finding more historic production cost data. Let me know if you know where to find some. Here's my suspicion. Bitcoin's logarithmic channel bottom is a rolling average of mining's production cost floor. I can't prove this. My sample size is too small, and I'm wide open to being proven wrong, but the data we have tells a very specific story. Does this chart look familiar? I mean, that's everybody's chart, right? This long-term logarithmic chart that everybody's tracking. So it's been 9 months since we bottomed, and miners' nominal production cost hasn't changed much. But Bitmain and friends aren't fools. They know the block reward we'll have in May. That's priced into the bottom line by now, into their bottom line by now. Production cost doubles when the block reward halves. That makes 63.40 the new floor. Smart money knows it again. Retail has no clue again. Lots of longs in the right place for the wrong reasons. That doesn't mean price will reach the $6,400 region, but Phil B makes a case for it. Big miners have incentive to drive Bitcoin price back to its production cost. They'd love to dish out max pain one more time before the bull market steamrolls forward out of control. That makes sense to me. Why? Low prices drive less efficient competitors out of business. One miner's capitulation is another man's market share. That's Phil B's take. Here's mine. Every bull market is preceded by a terminal shakeout. It's a spring, one last higher time frame stop run before the parabolic advance gets started. And you can see this is exactly what we've been tracking on this channel. This is Bitcoin in 2016 coming out of the bear market, hitting a key Fibonacci retracement area and coming back down. I've been saying I believe we are here, and it's awesome to see that this post has a similar thought process. So last cycle, the terminal shakeout preceded Bitcoin's accumulation range breakout. We never got one this time. I think we're in the process of getting it now, and I think it's healthy for the bull long term. 100% agree. This entire move that we're in right now is so healthy. It is from the bear market low. It is a higher low. I think this is the last time we'll ever see Bitcoin below 10K, but I also think we need to revisit liquidity in last year's eternal range before we can make a run at all-time highs. The longer prices stay low, the more inefficient mining operations go under. The more weekends who bought above 10K get shaken out, the $6,400 region could get front run. But a long bottoming process measured in months is just as likely, or both. Institutions, hedge funds, and state actors would love to reaccumulate at those levels. Their incentives align with big mining for now. Phil B thinks a pullback to resistance around $9,500 is a possibility. In my opinion, it could be a nice opportunity to head short or sell spot and rebuy lower. Be careful, never go all out or all in. A daily close above 10K invalidates this, in my opinion. If you've been waiting patiently to buy Bitcoin, 6,400 to 7,500 is a great buy zone. If we get there, the drop could happen fast. Doubt might creep in. This happens by design. Scarce asset ownership is a zero-sum game. You might not get a second chance at sub 7K prices. If none of this happens, it's bullish for Bitcoin. If all of it happens, it's just another guidepost along our path through Bitcoin's market cycle. Either way, I'm super bullish and your patience will so be rewarded. That was a long tweet, but so good. That's such a good tweet. And I had to share it with you on this channel as I get my day started. Here's the chart, right? Crazy. I'm not going to do all the comparisons right now. I wanted to share the tweet with you, but I have this red line here, going horizontally. That's a $6,400 range, just below the 200 weekly moving average. And all that whole post that we just looked at plays into technical analysis. And so the harmony, the confluence between his data and technical analysis data we've been sharing on this channel is crazy good and crazy bullish. So here's our low in December, the bear market low, to our most previous swing high. This is just one example. You can see our Fibonacci retracement, 618 to 786, perfectly confluent with this possible, I guess you could say, higher low that we just looked at on that Twitter post, right? So there's so much going on, and like they said in that post, this could be months in the making, right? So who knows? Maybe we do test 9,500 area again in the coming weeks, right? In the next coming months, then we come back down and we actually test that $6,400 area, right? And then we're kind of moving along, consolidating. People are getting restless going into February, March, and then things might get crazy. And I even have a symmetrical triangle just from a post earlier, and just what we're talking about right now even plays into that potential breakout of that triangle. So a lot going on here. I just wanted to share that tweet. Let me know your thoughts below. I hope you're doing well. But yes, I think the lesson here is very simple. A reminder of patience in these Bitcoin markets. Have an awesome day today. If you're here and you're not a subscriber, hit the subscribe button. Would love to have you as part of the channel. I will see you in the next video. Have a great day and God bless.